Okay. Okay. I'm sorry. Great. Look, thanks for having me today, Ron. Love it. I'm a passionate entrepreneur and born and raised Haligonian. I started off at the age of 21. Started a company called Source Security. I was doing physical guarding for concerts, festivals. Actually, I recognize a few people that I had exited from the Pope Fido years ago. I won't mention names here at council. But we did concerts like the Rolling Stones, big shows, had lots of fun. And I exited that company in 2017 after almost going bankrupt a few years earlier, and was lucky to set myself up financially for my family's future. So I'm one of the lucky Canadians. And this gave me a different focus for Chapter 2 in business, more based on purpose, scale, and impact. I was looking at what sector to enter, and of course, I was looking at housing. I saw a lot of the red tape and complexity with development, and I looked at existing housing, what I'll call workforce housing, or NOAH, naturally occurring affordable housing. And I looked, and there was four major players in the space. There was, unfortunately, but they were there, slumlords, nonprofits that were having challenges getting capital and scaling, publicly traded companies and institutions, and entrepreneurs and family offices that were mostly chasing, market rents. And so I thought, wow, there was a big opportunity to come in and revolutionize how housing and people interacted with one another. And so my company Vita was born in late 2018, and we're a certified B Corp, so we are certified to do good in the world. So we started in late 2018, buying some very challenging buildings, some of the stuff on Don Street and Evans, which were condemned by police. We acquired those as our starting properties. It wasn't an easy process. Today we have over 2,800 units between Winnipeg and Atlantic Canada, and our average rents are $925, including heat and hot water. This success comes from a few different aspects of our business. One, at 2,800 units, we don't have property managers or leasing agents. We've created a new model that allows the customers to manage the buildings, almost like Uber drivers. So our customers that work somewhere in the Canadian economy, they manage these buildings, and we pay them through a rent credit. And that allows us to be a low-cost operator, have more people doing less work. It doesn't put bread on the table, but it helps them get ahead. The second innovative thing we do is we build what's called community contractors. This is where we look to our customers and say, what are your skill sets? Can we put you to work through paint, caulk, mud, those types of things? And we approve them and train them as community contractors. We have lots of folks that do work at the asset level. We save 35%. They have a sense of pride and ownership, and they behave differently, and it allows them to put money in their pockets. And the last is treating customers as customer. When I entered the space, it was tenant versus landlord, and still is. And sometimes, when I'm in meetings in Toronto, when I use the word customer, people don't know what I'm talking about. These are customers that pay rent. They're customers. Resident may be used, mostly it's tenants. And so, our business is a little different. We look at what else can we do for the customers. And so we sell our customers products and services like telehealth through their phones, as healthcare is a challenge. So we have a deal with TELUS. We sell Bluetooth locks through Amazon. Our model is so innovative that we're actually doing work with Nunavut Housing in the north to help them decrease their housing costs through activating customers. So, now's the challenge is unsustainable costs like taxes. And so for our business, and Phil mentioned this, he mentioned 40% affordable. Most of our units are 60 to 80% long-term affordability, all done through the federal government with CMHC programs. And we wouldn't be where we are today if we didn't have that in place. Although we are at conflict with 30%, in some cases 30% tax increases in our portfolio. And it's a major problem. It's really inhibiting our affordability. And so we are at odds. That just doesn't work. When rent caps came into play and inflation was at hand, and at interest rate hikes, we went to the province. We own, the 500 block in different neighborhoods and throughout HRM, and we went to them and said, let's do a pilot. We need capital here for CapEx, and we'll deliver long-term affordability. And we did. We did a pilot with the province. But again, we are having a hard time even delivering on that because of the tax increases, which were not budgeted. So we're forced to sell units. We're now into agreements to sell 425 of our 2,800 units because we cannot sustain it through taxes. And so, what we're asking is HRM to create a tax relief program to incentivize landlords to commit to long-term affordability. Nonprofits receive a 50% tax break, not because of their low rents, but because they're a registered nonprofit. And I think we have to be flexible. We have to be stubborn on vision and flexible on execution in times like this. My time's up.
Thank you very much. So yes, your time is up. Excuse me, sorry, Mr. Libet, but Deputy Mayor Mancini has a question for you, if you're okay with that.
Hey, Ron, good to see you. Hope things are well. I know Ron has property in the Dartmouth North area and East Dartmouth area, and thank you for those properties because they are that affordable housing unit. You know, you're speaking of rent caps and assessments and property cap, and the previous speakers that were also landowners spoke to that also. You've never been shy to sit down in front of politicians. And so my question is similar to Councillor Austin, to a previous speaker, is what's your conversation with the province? Because a lot of the stuff you're talking about, again, is not us. So have you had those conversations with the Premier? Have you had the conversations with the Minister of Housing? And if so, what's the response you're getting from them?
Great question, Tony, and good to see you as well. And I'd say that's everyone's problem. You know, because when I first started this with Mike Savage and our past Premier, there was, it's not us, it's not us. There was a lot of it. Right. Both sides said it's not us. And so I will say this time, I went to the federal government. I had breakfast with Danny Sayed. He's the head of policy for the federal government. Said, what can we do? And we had a call with our mayor today, head of policy, and said, let's be very strategic on this. And let's all get together in one room and see how we solve the problem. And in that call, where I had, talked about, and certainly Danny saying, can we use some of the accelerator funds to start a program to reduce taxes for those who are committing to long-term affordability? No brainer. I mean, you think about an innovative, move like that would really put Halifax first and really put us on the map as far as being bold to solve long-term affordability challenges for landlords that want to keep rents lower for long term. And so, that was certainly the conversation. And I think a pilot like that, if there were a rebate or part of the budget that was put aside that was funded through the federal government, through the accelerator program, I think we're in the money. I think that seems to be win-win and a no-brainer approach. And so I haven't talked to the province, but I just went right to the federal government on this.
Just a follow-up question on that. So your definition of affordable housing?
Great question. I think that question always comes back to the customer. So my definition, as per our customer, is our average rents are $925. So my definition of affordability is different than others. It's what can my customer afford? And so, even with, I go back to the pandemic and when inflation hit, I mean, we were raising rents much above what we had ever done before on unit terms. We didn't want to do that, but we had to stay alive. And then we had to do an innovative deal with the province, which did work. If you drive by the 500 block, you'll see a big, a large mural there. Those properties look very different. That was with the help of the province. We had to create a new vision for a community to turn it around. And so, I think it is time that everybody says we're in this. This isn't just a municipal problem. It's not a public sector problem. It's everyone's problem. And I think we have to work together and solve this together versus, hey, it's your problem, it's your problem.
It's interesting your comment about using the term customer. When I first got elected in 2016, I started referring to residents as customer, and I took a lot of heat because we're not customers, we're residents, we're taxpayers. But the point that's being missed is you take care of a customer, you understand what the customer needs, and you address those needs. That's, you and I come from that private sector, so I understand that. Thank you for your time, ma'am.
Thank you. One more Councillor has a question, if you're all right with that. Councillor Hartling.
Thank you very much, Madam Chair, and thank you so much for coming today. I really appreciate the innovation, obviously your enthusiasm. For what it's worth, like councillors like me, we're taking notes, right? Like the rate cap is highly problematic. Where is our return? Like, where's the dividend of growth? I think that's another thing that we've heard. I appreciate you speaking to the concept of long-term affordability. You're saying $925. Is that for a bachelor, a one-bedroom? What is that?
So that's our average would be a two-bedroom, including heat and hot water. So our just to be clear, more deeply afforded than a lot of nonprofits.
Yeah, that's that, and I am very interested in picking up your idea. Like, I think that there is value and merit there, and I appreciate you so much coming forward today. So, when you say long term, what does that mean?
Well, our mandate is to have long-term affordable commitments. That's a company private mandate, but we've done affordability commitments with CMHC that really locks and loads that. I mean, those are federal programs, and Phil had mentioned that earlier.
Yeah, and
we would be higher. So VITA would be the largest private lender and utilization of CMHC MLI Select program in the country, and so we're very dedicated to that program, and we've used it, and it's been very successful. But again, it doesn't work with the budgets were never set to have 25-30% tax increases, right? And so those are at odds. And again, I'll just repeat, we are selling 425 units because we cannot sustain the tax increases. I don't have public capital, and I don't have free capital like nonprofits. So we are stuck in the middle trying to make this work, and we're doing our damnedest.
That's great. Thank you so much. I really appreciate your time, and I hope to see more of you. Thank you.
We have 2 more buzzed in, so you get to stay and answer a few more if that's all right. Councillor Young.
Thank you, Madam Chair. Thank you, Ron. It's really interesting to hear this. Councillor Hartley mentioned about the long-term low rates, so she kind of took my question away. I just want to add to it. So is there any possibility for the customer to get to buy into a lease to own during that period of time?
In our model?
Yes.
Yeah, so no, not currently. Although I will say we invested in a company called Addy Invest, and they're out of Vancouver. And what they do is they let customers, individuals in neighborhoods invest $1 into a project. And so we're an owner of that company, small owner. It was just an innovative housing company out of Vancouver. We haven't plugged it into our model just yet, and we are trying to tackle that problem in a different way. So we have a 55 modular development in Kentville, so 55 units of affordable net zero home ownership, and we'll help finance those units off our own balance sheet with customers, helping them with deposits, et cetera. But we haven't, it just doesn't work like that from an ownership standpoint because they're not condos, these are rental units.
Okay, my other follow-up was your turnover rate, or how long do they usually stay, your customers?
Yeah, so our turnover rates were 30% in this asset class pre-pandemic. They went down to sub 10. Now they're trending back, 15 to 17. I would say the new migration has caused this but there's been a new customer that moves around a lot faster, which, that does make units available faster versus the long-term Haligonian customer that we've had customers that have been there for 20 years in some of our places, yeah.
Okay, thank you.
Yeah.
Mayor Fillmore's next.
Thanks very much, Ron, for taking time to come in and talk to us about your very important work today. 3 short snappers for you. Who pays in your ecosystem for a tax increase? Will you be forced to sell off more property to cover new tax increases? And of the properties you're forced to sell, what becomes of them? Do they revert to market rent, or what happens to them?
So great question. I'll break this and make sure I don't miss this. So first question was, just repeat your first question.
Who pays for a tax increase?
Yeah, so who pays is the customer. And actually, I'll just expand on that. One of the things that I think that is interesting here is the customers, when we entered the asset class, didn't understand that everything impacts the customer. So even when, we've heard of like Acorn is a group, and, they came to some of our properties and said, okay, you seem to be a great person and doing good things, so we'll back off. And I said, well, we should be working together because the customer pays for inflationary costs. It is always the customer. Otherwise, you go out of business. And to answer, and one other piece I was going to say is we've also moved to what I'll call a co-stakeholder environment. And so when you're a customer at VITA, you get a video that says, let us tell you how this works. If you pay your rent on time and people don't have to chase you around, we save costs. If you recycle and we don't get fined by the municipality, we don't have garbage costs, which increase. If you tell us about pest issues and you utilize less utility, you and the customers pay less rent because the operating costs come down. That is mind-blowing because of the friction between tenant and landlord. And so we're big on customer onboarding, and yes, the customers get passed off the expenses of the business, and of course taxes is there. And I mentioned earlier, when the pandemic hit, we were starting to put rents up a much higher than $925. You know, one bedroom getting up to $1,100. I'm uncomfortable when I see that, and our team's saying, we don't do it, we're out. And now, to your second question, Andy, we're selling, you know, the units we're selling there because it's off-brand. I'm not saying that there's not a customer for it, but to put a 2-bedroom to $2,000 is off-brand for us, and it doesn't align with what we're trying to do. So we will sell that to customers who will have to put those rents up. They just will have to. That's the only financial way to make it successful.
So the units that are at average in the 900 range will revert to market rate
Correct.
when you're forced to sell them by increased tax rates.
Correct. They'll all be gone. Yeah. And look, we had to move quickly. You know, I'm a private business owner. I'm not going to sacrifice my family for what we're doing here. And so, yes, that was tranche one. We would like to have an innovative program like nonprofits. Kelowna has some very aggressive programs too for developers. But like nonprofits who receive a 50% tax break, if we're stubborn on vision and flexible on execution, it should work, you know. And I think if there was a slice of the budget, if it was $10 million, which would be less than a percentage, funded by the federal government, no brainer. And we should be leading the path here in Halifax for the country on how to solve affordable housing. And it is a game of inches, and it's going to take. There's not one silver bullet. You have to move at this thing at all sides, right? So, yeah, thanks for your question.
Thank you. Two more councillors have buzzed in. Councillor Hinch.
Thank you, Madam Chair. Ron, I just want to know, is any of your stock based on income levels?
Oh, they're not. When you say stock based on income levels, sorry?
So rents based on income levels.
I mean, part of our screening process is to ask customers what their current rental income or sort of their current income levels are. We do want them to be successful. If someone has an income level of $1,000 and the rent is, you know, $925, we know that we are not setting them up for success.
Right.
So we ask our customers in advance during the application process what their income levels are.
Are you part of the subsidy programs
No.
that the province has?
We would have. I probably lost sight. Yes, we would. We have customers that are certainly subsidized by the government, and we have some direct programs, I believe, with government. We certainly have deals with iSands, Adsum House, other nonprofits for sure. But we are not directly connected. These would just be things that happen. Yeah.
Thank you.
Yeah.
Councillor Hartling, you have one more chance.
Thank you so much, and then I promise I'll let you go. But you've just been so great. Still, yeah, Councillor Hartling still talking. I'm just wondering if you would tell us about your experience with bylaws and building in HRM. If you could speak to whether there have been any challenges, setbacks, or whether you see opportunities that we have not yet explored. Or alternatively, if you want to perhaps comment on the way that development has rolled out in the last couple of years.
So before you answer that, sir,
I guess it is
would you
like
to take that offline because we're on budget and that's planning and development.
Well, I would only insofar as perhaps it affects your bottom line.
Yeah, and I would say for the most part, and this was part of the design of our business model, we buy buildings. We don't go into a unit to renovate unless someone's toilet's broken.
Okay.
Right?
Okay,
and so we don't really run into a lot of these problems. And that was done by design only because when I had the security company and I would get a call from a compliance officer that would say the word security is 0.1 inches or 0.1 centimeters too wide, and I had to redo all my uniforms. That pissed me off. And so I try to stay out of the compliance.
Right.
And so we do very light touch with our properties, which has also allowed us to scale so quickly.
Okay.
Right? So, and I haven't had those challenges, but I've stayed intentionally out of the way of that
Perfect.
stuff. But
Okay. Thank you very much. I appreciate that.